Hi there. Have you ever tried to accidentally underpay or delay payment of tax on vehicles or other property? If yes, then you do know for sure how harsh the penalty will be. The arrest of bank accounts, forced sale of property, bans on traveling abroad. For sure, many of us have come across this. It is worth recognizing that in relation to ordinary people, our state uses very effective methods for the timely and complete collection of taxes. However, when it comes to big business and persons affiliated with the authorities, the approach of the government here changed dramatically. Instead of fighting tax evasion by these individuals, our authorities prefer to create all conditions for them to do so. Today, I will tell you about how, under the pretext of developing the stock market and attracting foreign investment, the authorities of Kazakhstan facilitate the unimpeded withdrawal of capital from the country and the evasion of multi-billion tenge taxes by representatives of large businesses and quasi-public sector. You will learn about how to legally decrease taxable income by issuing securities on the local stock exchange. I will try to explain in detail how one of the most effective schemes for the unimpeded withdrawal of capital to offshore works in practice. So, let's go. The starting point of our entire scheme is 2015, when the first president of the Republic of Kazakhstan, Mr. Nursultan Nazarbayev, signed the constitutional law on the establishment of the Astana International Financial Center, or, as it called, the AIFC. Under the pretext of attracting foreign capital to the economy of Kazakhstan and developing the stock market in our country, within the framework of the AIFC, the state launched a separate jurisdiction with its own legislation, financial regulator, court and arbitration center, and of course, the stock exchange, which was named as Astana International Exchange. All of this was accompanied by full tax exemption until 2066 on all income derived from the provision of financial services. But it is not this exemption that is the key element of the scheme for the transfer of capital to offshore and tax evasion. All this would not have been possible without the organization of a trading platform within the Astana International Exchange. In general, what is the purpose of the stock exchange in classic theory? In short, the whole idea is to help people who run a transparent and honest business to raise capital for its further development, and allow the public to increase its savings by investing and trading in securities issued by just the same businesses. The capital attracted by businesses is often used in the future to expand existing and building new industries, thereby creating additional jobs, increasing tax revenues, and improving the life quality of the population. We can say that this is such a crown of a market economy in which almost every remains in a winning position. This is exactly how stock exchanges work in many developed countries of the world, but by no means in Kazakhstan. In our country, the broad masses don't even know what stock market is. Even though most of the global market indexes have risen 1.5 or 2 times over the past 2 years, the current share of population investing in stock market in Kazakhstan is only 2%, while in the United States it's about 56%. I believe that this fact gives the opportunity for the local authorities to create favorable conditions for the special people for the tax evasion with the help of the Astana International Exchange. For example, let's take the AX official list of securities. This list consists of 136 different instruments, of which only 64 were offered to the public. These instruments are marketed as public and mainly represented by exchange-traded notes, shares and bonds of well-known companies. Most of the securities listed on the AX are labeled as wholesale, exempt, NA, and categorized as private placement, which means that ordinary investors cannot trade such securities. More than half of private placements are in companies controlled by Kazakhstani oligarchs, among which Timur Kulibayev, Kairat Satybaldy, Alexander Mashkevich, Bulatu Timuratov, and etc. Slightly less than a third of such placements are held by quasi-state companies, most of which are part of the Samruk Kazina Sovereign Wealth Fund. Only the remaining small part of private placements are attributable to international financial institutions and foreign companies. The above persons do not particularly need investments from the outside. Most of them placed their securities on the AX only for the purpose of so-called tax optimization, due to which the state budget of Kazakhstan annually loses tens or even hundreds of billions of tenge. I prefer to call it legal tax evasion. How do they manage to do that? All thanks to Articles 288, 307, 341, 645 and 654 of the Tax Code of the Republic of Kazakhstan, which exempt the security holders from paying income tax on coupon and dividends, as well as capital gain from the increase in the value of securities that are in the official list of the stock exchange operating on territory of the Republic of Kazakhstan. We have two such exchanges. They are Kazakhstan Stock Exchange, or KC, and the AX. The total number of private placements on the KC is just 2, while on the AX is 72. Considering that number and the share of foreign issuers at the same time, the conclusion suggests itself that the AX was created not to attract foreign investments, but just to evade taxes for a special circle of people. Let's focus on specific market segments of the AX and review some examples of tax evasion. Pre-IPO segment. According to the legend, the companies whose shares are admitted to the pre-IPO segment are, as it were, preparing for the initial public offering, thanks to which anyone could buy these shares in the future. But, as you already understand, the segment is just a front, and it is hardly worth waiting for the public offerings from the owners of such issuers. Pre-IPO is probably the main tool by which the owners of domestic companies, mainly we're talking about subsoil users, can avoid paying income tax when receiving dividends and selling their shares or stakes in these companies. The presence of shares of subsoil user company in the official list of the AX guarantees its owner full exemption from income tax, which varies from 10 to 20% of the amount of taxable income. It is noteworthy that, according to the rules of the exchange, the shares of companies should be listed within the pre-IPO segment for no more than 1 year. However, this period can be extended by the decision of the management of the AX, which is not difficult for oligarchs to obtain, judging by the example of so-called Eurasian trio companies, Mashkevich, Shadiev, Ibragimov, which have been in the pre-IPO segment for the 4th year already. In addition to the Eurasian trio, there are 2 companies of Timur Kulibayev and other 2 foreign issues in this segment. Personally, I believe that the exemption from the taxes in this case is unfair, because in fact, the owners of subsoil user companies receive income from the primitive sale of raw minerals, not particularly bothering with the processing and production. Private bond segment, marketed as wholesale and exempt. While pre-IPO exempts from paying income taxes on receiving dividends and selling shares, the wholesale and exempt private placements allow in fact to reduce any amount of taxable income of companies by issuing bonds as low as to 0. By their nature, private bonds are interest-bearing loans, where the interest rate or coupon depends only on the imagination of the issuers themselves. To understand exactly how a private bond tax avoidance scheme works, I will give you a simple example. Imagine that you are the owner of an oil company who simply doesn't want to pay corporate income tax. By the end of the year, you expect your company to receive, for example, 100 million tenge in taxable income. Accordingly, the amount of corporate income tax payable will be 20 million tenge. All you need to do in order not to pay this 20 million to the state is to issue bonds with private placement on the Astana International Exchange in the amount of 80 million. with an annual coupon rate of 25% and redeem the entire bond issue on paper. In most cases, you will not even need a live cash for the entire operation, since it is unlikely that the exchange will ask you for your payment confirmation. This is how, with the help of the Astana International Exchange, you can theoretically avoid paying any amounts of corporate income tax. Moreover, thanks to the segment of bonds with private placement, it becomes much easier to withdraw capital from Kazakhstan to offshore zones, may it be the Cayman or Virgin Islands, which are in special demand among our powers that be. The scheme is essentially the same as in the oil company example. Imagine that your Kazakh company has 20 million bucks in cash that needs to be moved offshore. Within 24 hours, we register a new company in the Cayman Islands, while our Kazakhstani company registers on paper on the Astana International Exchange a bond loan for $200 million with an annual coupon rate of 10%, upon payment of which, after a month or two, our offshore company will freely and legally receive desired $20 million. This is because, on paper, our company from the Cayman Islands will be the buyer of the entire bond issue, and it is all completely legal. The beauty of such scheme is that companies issuing private placement bonds are not required to disclose neither the names of the ultimate owners nor the names of the buyers of such bonds. Thanks to these private placements, the budget of Kazakhstan is losing hundreds of billions of tenge, which could be directed at least to solve acute social problems. Kazakhstan loses from 162 to 323 billion tenge on the uncollected taxes on coupon interest payable to private bondholders on the AX alone. Do you know what is the funniest and saddest thing about this situation at the same time? This is that the state not only receives hundreds of billions of tenge less, but it has also spent and continues to spend at least 286 billion tenge on the functioning of the AX and other AFC working bodies. I mean on the functioning of the stock exchange, whose annual trading volume hardly exceeds the average daily trading volume of the stocks of a small American manufacturer of bed linen? By the way, you can find more about how the budget funds allocated to the AFC are spent and what results this financial center has achieved by clicking on the link above or in the description of this video. Let's be completely fair. I wouldn't blame the businesses for trying to reduce costs even through legal but tax evasion. Even though very high-profile names appears among these businesses, should everyone be given a chance to minimize the taxable profit, we'll use that chance. The question is, why the state authorities not only creates conditions for that, but also spends a huge amount of money from the state treasury? What the superiors of the Ministry of Finance, the Accounts Committee, the General Prosecutor Office and the administration of the President, who is, by the way, the chairman of the AFC Management Council, were actually doing? Is it really so bad that none of the above can finally, in fact, put things in order with all these tax holes and the outflow of capital from the country? Or they just don't want to do so? Let's live and see. Thank you. Please take care of yourself.